Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Tuesday, November 20th, 2018. All right, lots going on today, so let's dive into the charts. I'll tell you what I see, and just a quick note. And this comes from quite a few questions put to me in the trading room, new people coming to the site, new members, and other questions I get as far as is it too late to short? For the most part, the easy answer is yes. I think so. Trading and investing is all about risk reward. And, one of the statements I made in the trading room earlier today, and this is right about when the market was at its lows. It's had a nice recovery rally so far. We're still red right now. This is the NQE minis down to 1%, but you can see a big bounce off the lows. So my reply was, yes, pretty much. I think it's too late. It's not very objective to short, and the reason is I think the downside in the market from this point, and again, this was earlier today, was 0% up to maybe 5% at most, and 0% meaning that we may have already seen the lows today. And I'll show you why here. And again, this is where it gets tough because I can see if we take another thrust down, and that is certainly a possibility. The day is not over. We've seen some impressive intraday recovery rallies. We've seen bullish technicals and divergences that start to play out and then get sold into. So what I'm going to show you is, I'll show you what I see. And there's a case to be made that a bottom is in today. And there's also a case to be made that we reverse and watch out for a break. If we even get close, I think, to today's lows, if we reverse and get maybe from where we're at now, 2/3 of the way down, 3/4 of the way, I think we go all the way down, we take it out, and then we get the waterfall type sell off. But again, the bottom may be in, and here's why. So just to follow up on yesterday's analysis, and video, what I was watching, and they've extended a little bit, but they're holding on by the skin of their teeth, are these divergences. And this is, by the way, the NQ. If I don't make mention, it's up here on the top. Nasdaq 100 E-mini futures. And so what I was pointing out are these bullish divergence. You can see on the RSI here making higher lows, and the PPO making an equal low. You can still have bullish divergence as long as the indicators are making equal or higher lows with prices making lower lows. So that's positive divergence. It is not a be all end all, doesn't guarantee you go up. It's not a buy signal in itself. However, buy signals come and they're all the better when I have divergent lows. And then you see something like this, a big green, see this big giant green bullish candle. That is, especially when it comes after the divergence, which is now confirmed. What happened is yesterday, it looked like we were going to confirm that divergence, and we had another thrust down. The lines were rejected, and that's common to see the PPO lines attempt to make a cross and then fail, but now we have made a crossover. So check mark for the bulls. Coming up on resistance here. I also mentioned this in the trading room earlier today. The first decent resistance is there, and I'm going from memory because I have to, well, I could put a cursor there and tell you. Let's do that. 66.33, call it. Pretty decent resistance. Nothing, actually, it's minor resistance, I should say. So look for that to see if we cap any rally today. And again, this is something that the bulls can certainly build on. I didn't mean to do that with the chart, and take it and run because these are big divergences. Remember, I pointed out these bullish divergences back here, and that led to a rally. And I'm going to give you both sides of it here. In a bear market, if that is what this is, versus just a really bad correction, we haven't hit the bear market threshold yet. If this is a bear market, and so far, the price action has been very indicative of that so far, all the way down. And what I mean by that is during bullish trends, remember think the last few years, at almost any point in time, you had a nice, clean, bearish chart pattern, whether, I don't care, a head and shoulders topping pattern, a bearish rising wedge, any other kind of bearish pattern. And what you'd see, one of two things. Either they wouldn't play out, they didn't break down, or they broke down, sucked in some shorts, and then boom, the market turned around and gunned it to new highs. It just as a pattern looked, just as that short trade looked like it started to be playing out. And don't get me wrong, we had plenty of short trades that were successful. There's individual stocks, but I'm talking especially on the broad markets. So now flip it over. If we are in a bear market, and that has been what we've seen lately. Here was a big bearish rising wedge. Bullish falling wedge that was recently pointed out. We went on to break above it, and we did rally, broke out, back test, had another leg higher, but that is weak. compared to the scope of that pattern, that is a very muted bounce, and it probably didn't even meet the measured target, which is the widest part of the wedge. When you take the widest part of the wedge, add it to where it breaks out, that's your measured target. And so again, that's typical bear market action. And then what you followed up with, as I mentioned, a little small divergent high right there, but look at the move it played out for. So this is, to me, just like the charts were for the last couple years. For the most part, we had some corrective phases during there, and but for the most part, where now bearish chart patterns, even the smallest of those, are playing out for much larger moves. So where am I going with this? Be suspect of this. You need to respect it. It could play out sooner or later, and I think sooner than later this correction will end. Whether this is just the first corrective wave in a new bear market with a nice rally to come, but then falling short of new highs with another leg down, or whether this is just the end of a pretty bad correction with the market going on to new highs. I personally, I don't care, because I'll trade the next trend up, and I'll trade it down. You don't have to get, that's the beauty of being a swing trader. You don't have to get married to your positions. But so there's the levels to watch. That's the developments or that's a development on the NQ I wanted to mention. I'll get to SPY and QQQ in a second. And you can see the same thing here on ES. I probably pull that line up a little bit. Sometimes it's hard to grab these interactive brokers charts. But yeah, well, you can see that making a slightly higher high on the RSI. So there's your positive divergence on the 60-minute time frame. And of course, you have the nice big green candle. You can see it there as well on ES so far. So there's a case, or one case, if you will, for a potential bottom, because these are big 60-minute divergences. And the bear case says, look, so far, every time we've had some bullish setups, yeah, they play out a little bit, but they fall shy, and there's still a mountain of resistance overhead, a lot of work for the bulls to do. So 26.89, if you get that far, is very significant resistance. But here's the thing, guys. I suspect where we are in the cycle of things now, if we're going to go lower, then it's going to happen today. They're probably going to fade this rally before the close today. I don't know. Thanksgiving week kind of messes things up a little bit, but let's check the charts on face value now and just back that out for a second and just watch what happens today. Because again, I think if we go down anywhere close to today's lows, let's say even 2/3 or 3/4 of the way, I think we'll just continue on through, break down, and then get the waterfall sell-off. We'll take these divergences out and then go on down on the daily charts, which we still have divergence, and hit my lowermost targets. Members of the site know we hit our first target on QQQ today was hit. We actually exceeded. We gapped beyond it on the short trade at the open. So if you took partial profits there, great. It was a good entry, and that's where targets are set, where I expect a reaction. But we still have an additional target, and I'm still open to that scenario of another move down. But like I said, it gets hard here. And do you want to be shorting at this point? You can, if you're going to do it. Here's the thing: if you do it with futures, and I know futures aren't for everybody. They're leveraged very large, and some people don't have a futures account. But you can trail stops down, and then you have the beauty that if there's a big move overnight, you can have your stop hit. And there's enough liquidity to have just a regular stop loss order in the overnight session without getting bad fill. Unfortunately, if you go with QQQ or SPY or any individual stocks, and there's something that happens overnight, some big market moving event, and the market's rallying, the futures gap way up here, or move way up here overnight, the market will gap up and it'll bypass your stop. So that's a little sidebar. And just to let you know, when you have these periods of increased volatility with gaps almost assured with all the movement we've had in the overnight futures, keep that in mind with your positions, that even the best place stop can and will be bypassed at the open and filled at a worse price. Or if you're using a stop limit order, they just get bypassed and never get filled unless your stock comes back to that price. So that's it. That's the futures. There's your bullish case and the bearish case. Let's go out to the daily charts and we'll look at that. So here's okay, this chart will work. This is a clean version. I'll show you. Here's those lows back from earlier in the year. We spiked below it in the February low and then came back down here in the early April low, and that's still a target area range there that I think is pretty likely. But again, Here's what I was looking for all along, and now we have it. It's not confirmed, but that was that the markets will go on to put in way back here. That was when we had this first initial counter trend rally, and right there we shorted, had a nice entry on QQQ on the kickback rally. Of course, we were already short. We covered it here first time around, got out, sidestepped the rally, and got back in short again. But at that time, that's what I was looking for, to basically undercut that previous low. At which point, I predicted we'd have a bullish divergence. Now we have that bullish divergence. The big question is, just like those 60-minute charts, I've been highlighting divergences for a while. Let's do it this way. Let me grab this trend line. Are those divergences? They're certainly, they could be finalized now. What do I mean by finalized? Again, I like to see to confirm the divergence. Right now, the PPO, which is a momentum indicator, is head pointed lower and can continue lower. And it can even take out the divergences. So I like to see the PPO cross back up, make a bullish crossover. So it could happen now if we reverse, if this reversal today, if we continue to build on it, you will get a bullish crossover soon, in which case the divergence lines would look like this. And if we continue on down to or even undercut those lows there, the divergences, as long as they don't, as long as the PPO does not move back down below that previous reaction low, same with the RSI, we'll have divergences. So there's that range, and this is why I said it gets a little more difficult. And it also comes into, are we going to see that more forced selling? That has been the trend lately. I watch the market. I'm a tape reader. I like read the tape, try to anticipate what's going to happen. And so far, everything that I've anticipated has happened. When these rallies get sold into, there's force buying. This causes investors to get nervous. They liquidate their funds. The funds then have to sell to meet those liquidations. And again, it's a vicious cycle and won't continue forever. Right now, the fundamental landscape, although I suspect and predicted that will start to roll over as the market goes down. But either way, we're not in bad shape. I don't foresee any type of major crash or anything here. I just see the possibility, like I said, that we either for this leg down bottom today at today's lows, or at most anywhere from about another up to another 5% or so downside to that range, and then we set up for a nice tradable rally. Now here's the thing, to really, and believe me, you don't always get what you want in trading and investing, but to really paint my picture perfectly the way I want to see it, to have confidence to start loading up on some longs for a nice swing trade. And again, whether it's for a move up to new highs, which I really doubt at this point, anything's possible, or even a nice counter trend rally that can go on for a couple months and maybe into early next year. To see that, what would make things look really nice would be to have also a divergent low in SPY. You can see SPY is still well above the previous reaction low from, I think that was October 29th or 30th. Um, so, and you can see right now this isn't looking so good. And I mentioned that today, that I'm noticed SPY was down nearly as much as QQQ. It's starting to play a game of catch up. There have been a lot of these steady Eddie dividend stocks, the Johnson and Johnsons and a lot of other companies like that that have held up, healthcare companies and others. And I think those are starting to will start to feel some pressure here. So plain and simply, from just looking at SPY, I see more downside here. I see a bearish crossover in the works. We'll probably come in, get a lower low, take out that previous low, and I think it would certainly be a cleaner scenario. And again, sometimes I have seen where one of there's a lot of indexes out there, but I follow, the two main large cap indexes that I like to follow are QQQ and SPY. Get an idea where they're going. The rest are going to follow. Have a lot of overlap, of course, and Dow's only 30 stocks, but then, some very similar to the S&P 500 as far as, sector diversification. So there it is. That would be, not that we can't move up from here, but that's what I favor. So I think this rally is going to get sold into. How hard you want to bet it, that's up to you. Remember, I view the markets like a rubber band. You stretch that rubber band. The more you stretch it, the harder it's going to snap back when it finally does. So if you are, adding new shorts at this level, just be aware that we could reverse at any time. And you're also exposing yourself, if you're swing trading, to a possibility of an overnight gap. If something happens that really causes the futures to rally overnight. So there it is. Let's just keep this one short, conclude it with the 60-minute charts of SPY and QQQ. I know a lot of you don't trade futures and want to know where these are going. If you recall from the recent videos, I believe I mentioned this is a last ditch nearby support level 163.44. Look at that, beautiful. We hammered right off it today. I think the lows were maybe a dime below that, 10 cents or so on a $263 share price. That's statistically insignificant. That's a perfect hit. And so what you're watching for right now, this today's gap. That is a key level. And again, the onus is on the bulls right now to take it and run. SPY has potential divergence on the PPO. It's already gone, burned through on the RSI. It's made a lower low, but you still have PPO divergence, and you have this big gap overhead. And I'm referring to, well, today's gap. You have today's gap, and again, this was a support level before I had here, 268.12, and now that's resistance. So that's what the SPY has above it. And today, so far, if you look closely, it's stalled out at the top of today's gap. This is where it's stalled out, I should say. No, we gapped down to there. It's stalling out at this level, and the more it can do to work its way up here, but again, it has a lot of resistance over here. But if you see just big green candles coming up through here, that means the buyers have stepped in. That means the funds are not under pressure to liquidate. It means they're buying, they're accumulating, and the bottom could be in again. And so it's when you look at this 60-minute chart, even though we had some spikes below, those were very fleeting, but most of the reactions occurred here. So to me, this is almost a double bottom, if you will, in the SPY. Again, technically it's not. We had this one brief spike. That's a 60-minute candle, so you can look at it that way. And again, it would be bullish if that holds, and we could run up from there. But you see the levels to watch, and if you want to short, 162.20 was a level I had on QQQ, a support level, which I considered the last ditch support level, which has now been taken out. Again, that's where most of the trading normalized that day, other than that brief spike. And you can see we took it out just briefly at the close yesterday, gap way down below it today. And so now we're coming back up. That should be formidable resistance. Bears want to see this. If you're short and you're going to ride this thing out and try to maybe gain, profit another 5% or so on QQQ, then you want to see that level rejected. And what I suspect, a lot of eyes are watching that gap. I don't think we're going to get there today. I think the sellers will step in because too many eyes want to see it. Too many people want to short it. And if I'm wrong and the supply dynamics have shifted, and the sellers are washed out and the buyers start to step in, then we'll blast on through it and we'll probably keep going. So watch that level. And I'm not talking a little poke above it by a few points, a big green candle, impulsive buying. You'll know it when you see it. But as of now, and I'll extend that trend line down, looks like we failed there. There was that bullish falling wedge that I pointed out. We had bullish divergence. I don't have it drawn out here. There was the breakout, and I showed that to you on NQ. That was as far as it went. And so we came back in, we back tested that trend line yesterday, and boom, fell below it. And now that's still acting as resistance. So there's your levels to watch. And I will tell you, I am leaning towards this scenario right now, but I am certainly open to the possibility, and I will adjust my positioning accordingly if the bullish case continues to firm up. Oh, and by the way, like I said, we already hit the first target on QQQ today. Nike hit its final target right here. Still have our Netflix trade, which is very close, and I took a look at that today. I might have to revise that final target, but there it is. So when I start to see this is when it helps to affirm my belief that the risk reward of shorting is not very good. You can see we have potential divergence in Nike. It can certainly go lower, keep that divergence in place just like the market, but that's a pretty decent support level, and that's why when we hit that today, I post on the site, I'll give my opinion usually when I have a trade hit the final target, whether I think there might be more downside, in which I'll say, even though that's our final target, you may just want to set a stop above and trail it and let the position run, maybe trail your stop down. But in the case of Nike, it looks like the RR isn't very favorable now, as long as those divergences are in place. If today's lows break and the market's going a lot lower, next target's all the way down here. But again, we shorted this one way up here, and the whole thing in the stock market, it's all about risk reward, and that whole saying is, bulls make money, bears make money, pigs get slaughtered. So when the risk reward suddenly starts to shift where it's not so favorable anymore, Like I said, maybe there's another 5% downside in the market, maybe not. But if the odds for a snapback rally of 5% or greater exist right now, which they do, that makes it almost an even wash. To make 5% shorting to risk 5% if you're wrong, that's a 1-to-1 risk reward ratio, not very attractive. So, all right, we'll watch and see what happens, and I'll do an update later today. I'm dying to see how far they can take this today. If they can take out those gaps and keep going from there. So, like I said, it's certainly priced in the charts. Onus is on the bulls, so let's see if they can run with it. And if not, you'll probably see another wave down, and then this thing should be over soon. I think by latest next week. But again, as we head into the holidays here, trading gets thin and can make the charts a little messy. So if nothing else, kind of maybe keep it light this week if you're, considering, adding new positions. I might hold off on that or just keep those positions light until we see the next clearly objective long or short entry. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.